welcome to your mortgage rate forecast with Scott Criss, your mortgage rates and news for May 3rd, 2018. So here's where we're at. Bonds are up today at about 101.85. A lot of this is because of the Fed yesterday. They said they're hitting their 2% inflation target, and I think that's a big reason why we're seeing stocks are down over 100, almost 200 points today. So as far as reports today goes, jobless claims came out, not so helpful for bonds, but the productivity, the trade balance really didn't have a big impact. So, but I think what a lot of analysts are really getting ready for is tomorrow's jobs reports. So that could be a major market mover. To kind of show you where interest rates are at, I love this new chart that we're going to start doing. It's called the MBA survey. Mortgage Bankers Association, they reach out and have, I would say, a more scientific approach compared to Freddie Mac as far as what the average consumer is seeing for rate. So we're right at about a 4.8 nationally based on their data. And so anyway, this is a nice little chart to just kind of see where the average rates are at. Now let's get back into some technicals with bonds. If we take a look at the charts, you can see my mouse right here. Bonds are trading pretty well this morning. They're up pretty nicely. Again, I think that's a lot to do with the Fed yesterday and, of course, how stocks are trading today. But you can see this big trading range between about 102.10 and all the way down to about 101.35, 101.40. So pretty big gap here if you're looking at my mouse. And so if the jobs reports comes out poorly tomorrow, we could fall down as low as 101.20. To kind of quantify on Freddie Mac's terms where bonds are at, in March, Freddie reported a 4.44 rate at half of a point. That's when bonds were trading closer to about 102.50. Now we're only at 101.85. So that's a 65-cent difference. So if Freddie Mac was saying, hey, the average consumer is paying half a point there, they're probably paying more than a point to try to get down to that rate. But again, I kind of like that MBA survey. I think they have a much more scientific approach. Instead of someone calling saying, hey, what kind of rates are you offering? It's more of like, hey, what are you guys closing on? Like, where's that data? So anyway, you guys are going to probably see a little bit more of that chart coming down the road. Let's get into some projections. My last projection was a miss. Bonds beat my expectations by 5 cents. Apologize for that, guys, but let's see if we can clean it up on this this week. Here's what we have. In the short term, analysts are all over the place. Some analysts are saying to lock, some are saying to float, and so it's really just it's a tough read right now as to where bonds are going to go ahead of tomorrow's reports. Just very wishy-washy. But on the long term, 30 days plus, again, guys, they're staying pretty consistently bearish, thinking that bonds will continue to be pushed and pressured lower. So here's where we're at. I believe for my next forecast, we're going to probably be trading between 102.10 and 101.20. We're currently trading at 101.85. And so here's my position. We have, if the jobs reports comes out tomorrow and it does pretty well for bonds, that means we can gain 25 cents. But if it doesn't come out well, I think we could lose up to 65 cents. So I'm not a gambling man. If it was me, I would probably lock in and just take my chips off the table. But you know what? If that 25 cents, that 25 basis points is important to you, you know what? If the reports comes out, I would say, hey, go for it. But just be careful, guys. If you like it, lock it. That's my best advice. But that's the forecast for next week. We'd love to hear your comments, any questions, or maybe if you have your own idea of where bonds are going to be trading, how interest rates are going to be impacted. We'd love to hear from you. Leave your comments down below. And don't forget to hit that like button before you go. And if it's your first time on the page, you can subscribe. So at the top left, click that guy, and that will get you a little notification when we release new content. And if none of this made sense to you, there's a little link at the top right, and that's going to be Mortgage Bonds 101. That'll teach you the basics that you need to know when you're trying to figure out the best time to lock in your interest rate. So anyway, that's it for now this week. We'll see you next week, and have a good one, guys. Bye-bye.